Hello everyone, welcome back to the CA Universe. In today's video, we will be discussing the more questions from the paper that appeared in December 2022 for foundation exam of Economics and Business and Commercial Knowledge. So let us begin. So this question says, in capitalist economy, what is rewarded? So there were four options, out of which the most suitable would be these two. But when we talk about capitalist economy, we know that the aim is to maximize profits, and it is based on consumer preferences, right? So it is business decisions, because whatever decision the business takes, it keeps in mind the profit motive, and according there are no economic decisions which are important in a capitalist economy, right? Let's move ahead. The next question is, if the change in supply is more than the change in demand, what will be the effect on price? So in this case, when there's excess of supply, see, for example, in this case, if this is the demand curve and this, let's suppose, is the supply curve, and there is a little change in demand, they're saying, and the supply is more. Okay, so supply, let's increase the supply this much. You can see that the change in supply is more than the change in demand. So if this was the original price, now this is the original price. So what we see here, that the price has reduced. Why? Because there's more supply, greater supply in the market than the demand, right? Let's if we take another example, let's consider this as the demand curve and this as a supply curve. So in this case, let's assume demand to reduce, okay, and the supply, the change in supply, they're not saying in which direction, but they're saying the change in supply is more. So let's assume more reduction. So when there's shortage in supply, if this was the original price, now this would be the original price. So in this case, we see that the price is increasing for that particular commodity. So what we see is that there could be an increase, there could be a decrease, depending upon whether there's an increase in supply or a decrease in supply, right? They have not told us in which direction there's the change, so it would be, the change is uncertain. And mark this point over here, that you cannot say there's no change. There definitely will be a change, but in which direction, that cannot be said. Why? Because they have not told us whether the supply is increasing or decreasing, right? Now let's move ahead to the next question. It says, scarcity causes which type of central problem? So throughout the book, the economics book, what we were studying is that how to solve economic problems, how the central economic problem arises. So the correct answer is economy. Okay. Next question, study of GDP of Indian economy after COVID-19. Now you need not to go into the depth of the question. Once you have read the word GDP, okay, GDP, inflation or employment rates, etc., everything like this comes under macroeconomics, right? Next, if income elasticity of AC, now AC is the ACs you have in your homes, right, is 1.8. They have given us the income elasticity. What is the nature of AC commodity? Now this answer I was not very sure, so I've provided all the four options which were there in the paper. What I marked as the answer was conspicuous goods, because I think that people still see like AC laga hua hai ghar mein and all that, and necessary it could be because that the things that used to be luxuries long time back are now necessaries of like if you see a TV or a fridge, they have become necessary, but of AC I'm not so sure, right? Now let's move ahead to the next question. In the long run, now in the long run, you need to remember that graph in your mind, the long run graph. The average cost is equals to marginal cost is equals to long run average cost and short run average cost, right? Next question, marginal product is the additional output generated from one unit increase in input. This question is based on conceptual knowledge. It is taking your conceptual knowledge of the entire chapter, right? So you need to remember this. There were four options and this was the correct answer. Next question, not a condition for perfect competition. We all are aware that total revenue is equals to product into quantity. Marginal revenue is equals to average revenue, and average revenue is equals to price, because they all are equal, right, in that perfect competition. Now downward sloping demand curve here will be the answer, because it is not a condition. Why? Because in perfect competition the demand curve is parallel to the x-axis, right? Next question, when marginal utility is 0. Now again you need to have that picture of the graph in your mind. Okay, now if you see, the total revenue curve is somewhat like this, and when the total revenue is at its highest point, that is the point when marginal Okay, it could be for marginal revenue. In this case they are asking for marginal utility, so in this case the marginal utility would be 0 when total utility is maximum. Okay, right, so total utility is maximum would be the answer. Next question says a consumer experiences level of satisfaction at different points on the same indifference curve. So what now here they are saying is that if this is the indifference curve, there are 2 points on the indifference curve, and one of the properties of indifference curve says that consumer will have equal satisfaction no matter on which point he is on the indifference curve, right? All points on the indifference curve, on one indifference curve, give same or equal level of satisfaction to the consumer, right? Next question. Okay, next question here. When consumers stop consuming a good because other people are consuming the same good, that would be the Snob effect. All right, now there were 4 types of effect. Veblen effect is also there, demonstration effect. Okay, you need to remember those are important points from the exam point of view. Now a vertical supply curve parallel to the y-axis, so that would be like somewhat like this, means elasticity is I would say it is 0. Let's move ahead to the next question. Formula. Now in the paper this formula was given to us, okay, and it was asked that this formula is used for the calculation of what, right? So the answer was point elasticity. Next, oligopolist will try to maximize profits. Now when you read such a question, no, the image that is in your mind is that it is a complicated question, but actually when you just go through the answers you see that it is a basic concept that in perfect competition you cannot increase the price. In monopoly you can charge very high price, and in oligopoly you charge a price which is less than monopoly but more than perfect competition. So that would be the answer. NABARD, it is a developmental bank. Straightforward question. Increase in real income, I marked the answer as income effect. Next question. Change of scale. Now these were the options that were provided and the answer was long time period. Okay, when marginal cost is equals to marginal revenue, so this would be the graph, right? This would be the marginal revenue and this would be the marginal cost. The point where they intersect is the point where a firm is maximizing its profits, right? Identify the correct statement. The correct statement was that an industry has many firms. High beta stock, I actually did not know what the correct answer was, so I wrote defensive in the paper. The other options were less defensive, volatile, less volatile. So please mention in the comment section what was the correct answer for this particular question. In stage 1, total revenue is increasing at a decreasing rate. The answer would be diminishing marginal revenue. Next question, economic cost include. Now this is a very important point because it's a tricky question, and in exam they can either ask what does economic cost include or what does accounting cost include. So we must always know that economic cost includes both the implicit and explicit cost. Explicit costs are those that we pay to the outsiders like wages, rent, and implicit costs are those that is for the self-owned factors like the capital invested in the business by the owner. So if that capital was invested somewhere else, he would have got dividend on that, or if he was working somewhere else, he would have got that money, that is his opportunity cost. So those things form part of implicit cost and overall in the economic cost. And accounting cost only includes the explicit cost, right? Next, business and technology, they are interrelated and interdependent, right? Next, which bank? Now my answer went wrong because I wrote ICICI, but the correct answer is HDFC bank. Okay, this question can be repeated because they do not give you the question papers. Next question, which is incorrect statement? Now the bearish market is pessimistic market, right? That's what this was the incorrect answer. The correct would be that bullish market is optimistic. Next. Okay, so that was all for this video, and if you would like to know more questions and answers to the questions which appeared in the December 2022 paper, please tell me in the comments that if you want more questions. Thank you. Don't forget to smile.